Hey guys, it's great to see you again. You see, in the last few weeks, my Chinese tutoring stocks, New Oriental and TAL Education, have once again been hammered by the continuing regulations from China. So the natural question is, are these companies going to survive? And if so, what will they do to pivot? It's gotten to the point where, from an investing point of view, I think that I'm past the point of even thinking about selling. And given that my 401k, which mostly has Chinese equities now, my retirement savings is pretty much like a venture capital play on China at this point. And I'm okay with this because I believe in the companies that I hold will come out stronger from this. So in today's video, I want to share with you where I think the market is at for Chinese tutoring stocks, specifically the market leaders, New Oriental and TAL. The Chinese market in general with their regulations, and then what these companies are going to do to pivot based on my detailed research. If you're a returning subscriber, I plan to give a very brief update on BlackBerry at the end of my video because I know that you've probably been waiting for an update from me. And if you're new, my name is Larry Chung, CFA, and I hope you join my YouTube community where I talk about investment research and my opinion on the market. And if you agree with what I have to say or learn something new, then let me know by subscribing, turning on that bell, and liking this video. So I want to start off by re-emphasizing what I said in a previous video where in order to rationalize my losses in my Chinese positions, I have to understand why China has decided to turn against any sector that is in the way of its social mission for a more equal and more fair China. And this is the only way that I can have the mindset about holding these positions for an eventual long-term recovery. So what we know now is this. We know that China wants to continue joining the US as an economic superpower and perhaps even one day lessen their reliance on any given country. And China is now operating in this hybrid system where socialism meets capitalism, such that there are market forces that are allowed to play in the free market, but it has to align with the theme of average Chinese citizens being benefited. And China also wants to ensure that no company or no industry becomes powerful enough to have leverage on the government. And then finally, it seems that the Chinese government wants less foreign involvement in the country's internal affairs, politically, and even financially, even if it means driving out foreign capital. And we'll get to why that point is quite substantial for the tutoring stocks in China. So, as you know, the big tech in the US, the FANG companies, they're so powerful now and they're so rich with resources that even if the US government wanted to stop them from anti-monopolistic behavior, it's honestly getting to the point where it might become too late. The FANG companies have gotten too powerful, and trying to stop this monopolistic behavior in the US is becoming more and more difficult by the day because the country now is more dependent on these companies. And China wishes to avoid being in this position. They don't want to be put in a position where their future is dictated by major tech companies, and also be put in a position where their future population, their demographics, can't sustain the economic ambitions that President Xi has set out for the country. So to do so, China has set out to heavily regulate several industries, with tutoring being the first major sector that was a global headlines a few weeks ago. And although the news front has been a little bit more quiet in the past several days, there still have been some developments that I want to talk about. So the first is this new family facilitation education law. And it's going to ban private tutoring offered in homes for families. And this means that educational companies cannot offer in-person tutoring as a for-profit service. So this closes any loopholes or hope of tutoring companies potentially trying to use family coaching services to indirectly coach the student. In addition, a very significant news development is that Beijing-based VIP Kid is going to stop selling courses by tutors based outside of China. And I'm going to talk about how that is a reflection of how China doesn't want as much foreign influence in the country. I'll get to that soon. And then finally, a major English training center, Wall Street English, is expected to announce bankruptcy. So just thinking about that for a second, allowing foreign companies that are teaching English, which is one of the most important languages in the world, along with Chinese Mandarin, they allowed this company to go bankrupt. So it's getting real, guys. People are losing their jobs, and smaller cap tutoring companies in China are doing mass layoffs in order to just stay alive and conserve cash in this uncertainty. And even the educational entrepreneurs who have risen to billionaire status have also fallen from grace. New Oriental's founder, Ming Hongyu, saw his wealth shrink from over 3 billion to around 500 million after the crackdown. And one of the reasons that it's suspected that New Oriental might not have seen this policy coming was his relationship, according to sources on the media, his relationship with top levels of the government were not that strong. And his political connections were more on the local level. And so that's why it's possible that the government was going to be heavy-handed in its approach, yet he wasn't fully aware of it. But now I'm going to do a deeper dive on what I think the entire industry might be up to as a whole, and by doing so, help you understand that absent a delisting of New Oriental and TAL, they are already adapting to survive while other companies are going under. And I'm going to show you the data behind this. Now, just as a reminder of the extensive policies that have been underway, China ordered for-profit tutoring companies to become non-profits and also banned for-profit tutoring in many aspects. Now, this is old news, but I do want to just go over those items just so that we're all on the same page and that you are as informed as possible. So the new regulations include, number one, companies and institutions that teach the school curriculum must go nonprofit. And then the second item is such institutions cannot pursue IPOs or take foreign capital. That's a very important point. This point of not being able to take foreign capital, because potentially accepting foreign capital means accepting foreign influences. The third item is listed companies will be prohibited from issuing stock or raising money in capital markets to invest in school subject tutoring institutions or acquiring their assets via stock or cash. The fourth point is foreign firms are banned from acquiring or holding shares in school curriculum tutoring institutions or using VIEs to do so. Those already in violation need to rectify the situation. Now, in my opinion, I think that point is one of the most important parts of the regulation. I think the stock market is very focused on New Oriental and TAL Education becoming non-profits, and therefore their revenues and profits basically in their K through 9 segment going to zero. But I don't actually think that's the most important detail. I think one of the more important details is that these companies can't accept foreign capital. And I'll talk about the implications behind that once I finish this list. So all vacation and holiday curriculum tutoring is off limits. That point was heavily talked about in the news. Online tutoring and school tutoring teaching for kids below 6 is forbidden. And then agencies cannot teach foreign curriculums or hire foreigners outside of China to teach. So you can see from these items and these points that yes, the news has decided to focus on the nonprofit conversion aspect of these companies and the fact that these companies might not be able to make as much money as they did in the past. But out of all of these policies, the truth is, I believe the most important detail is that overseas investments is prohibited in investing in companies that teach school subjects. And the reason I think this is important is that China does not want their education industry to be influenced by foreign capital. In fact, there was an article from Bloomberg that talked about how the education sector in China, according to the State Council, they said in their words, it had been hijacked by capital. And they don't want foreign capital to influence the direction of their school curriculums. Now, this kind of thinking is consistent with the new ban on teaching of foreign curriculums and tighter scrutiny over the import of textbooks even. And even prominent startups like VIP Kid are now having trouble in their business model because they're no longer allowed to connect overseas tutors to Chinese students. So now that there's a ban on teaching of foreign curriculums, tighter scrutiny over the import of textbooks, and forbidding hiring teachers outside of China, this hurts a lot of companies that adopt this kind of business model, because that's a very traditional business model to connect Chinese students with foreign tutors. Now, in terms of TAL and New Oriental, where they are now, I don't believe that these two companies are going to go under like Wall Street English or VIP Kid or GoGo Kid, which is the subsidiary of Binance that runs their education department. And the reason I think this is I analyzed the latest job postings from LinkedIn. I analyzed the latest job postings from LinkedIn for New Oriental and TAL. And the reason I analyzed the job postings from LinkedIn is so that I can understand, well, what are the new roles that these two companies are hiring for? And therefore, that gives me some insight into what types of clients and families they are permitted to continue to serve and what kind of markets that they are planning to expand into. And what I found was really interesting, and I'm going to start off with New Oriental. And I found that as recently as 3 weeks ago, that New Oriental had job postings in teaching roles for the TOEFL exam, the SAT exam, teaching the IB curriculum, and also the CELTA exam, which is the certification for teaching English. And also they were hiring high school English teachers. Now this is interesting because this implies that the company is trying to focus more on its overseas test prep business for university admissions outside of China, and also certification exams for adults like CELTA, which is one of the largest certification exams in order to teach English. So for now, it appears that these are the areas that New Oriental will most likely focus on in the near term, since it can't operate its traditional K-9 classes at a profit. Now, going into TAL's LinkedIn job postings were even more interesting because it gives me clues on what they're trying to do to pivot next. And it seems that TAL is already hiring in roles that serve the non-academic tutoring market, as there are now open jobs in English drama instructors. And in addition, I saw that TAL was hiring learning partner consultants to assist in expanding their classes in one of their fully owned joint ventures in Singapore. So what this implies to me is that New Oriental and TAL might not only focus on the Chinese market in the future, and they might attempt to compete in the education space in broader Asia, Southeast Asia, Singapore, Malaysia, Vietnam, Indonesia, because other countries also have a very strong appetite for tutoring as well. And I don't think the market and the news have highlighted the fact that it's always possible that TAL and New Oriental will have ambitions to expand their teaching curriculum and online strategy over to, for example, Western Europe and even North America as well. Quick pause. Some viewers have asked me, Larry, what do you do for work outside of YouTube? And I want to take 30 seconds to tell you what I do. So I am a business owner of a coaching program called Tigerway, and my coaching program helps ambitious teenagers score above a 1400 or a 1500 on the SAT exam, which is the college entrance test. We also help with college consulting and help students really position themselves for top schools here in the US and get great acceptance letters and also great scholarship packages. So if you have a sibling, or if you're a parent and have a teen who wants to achieve more in the college process, we should definitely talk. I have a link to my private Facebook group below, and also a link to schedule a call with me and my team if you want to learn more about how we can help in that area. But now back to the video. So it's possible that New Oriental and TAL are already planning their next steps for creating and entering new markets. And I don't think I've seen any analysis or news headlines talking about this potential. So the estimated size for the Singapore tuition market, which is the education market, is around 1.2 billion. And this market size is a lot smaller than China's, far, far smaller. It's a fraction actually. But for now, it can allow New Oriental and TAL to build out their broader Asia education portfolio while awaiting any further clarity on the current policy regime in China. And so the key thing to note here is that New Oriental and TAL Education are continuing to hire, while other companies like Wall Street English, VIP Kid, GoGo Kid, which is the subsidiary of ByteDance in China for education, they're all laying off pretty much all of their employees. So this is really significant because this means that the market leaders have the liquidity to survive and expand their presence while other competitors are retreating. So what I also saw in the news was almost pretty much 90% of other companies that are tutoring providers have liquidity issues now. Like I just mentioned, GoGo Kid, which is a subsidiary of ByteDance, decided to shut down its operations. And this is one of the most significant policy events that are having a very direct impact on the livelihoods of real teachers and real educators and also their students. So what comes out of this is truly anybody's guess. But the recent new hiring posts that I witnessed and saw from these two market leaders means that they're not completely capitulating on the current environment. They're already adapting and they're already planting the seeds for their next steps. So these two companies on their balance sheets, if we look at their financial statements, they continue to have billions of dollars USD to use to survive in this broader bear market for education. And in the case of future, longer-term policy lightening, I do believe that these two companies will emerge even stronger because they were among the only companies left after this industry chaotic disruption. So if you're an investor in these companies, I want you to know that hope isn't all lost, and that these two companies, New Oriental and TAL, are probably among the few companies in this sector that will survive this policy change. And companies that survive these types of pivotal moments, according to other historical events of sector changes, often become much more powerful, much more diversified, and more ready to take nearly market-leading status when the dust clears. Now, if you're a teacher or a tutor who's actually teaching students in China, understand that this is simply China's way to control its demographics and also signal to their population that they are looking out for their best interests. And whether it works is a separate story. They're not doing this to harm the job market. They're not doing this to harm foreign teachers. In fact, they're already trying to match educators with new opportunities. It's just one of the things that they're trying to do to ensure that there's a more equal playing field in the country, as unfortunate as it is for this sector and for investors. And finally, if you're a subscriber of mine for a long time, I want to let you know that I still believe in BlackBerry. I want to give a quick update, and that I will post my analysis on BlackBerry further once there's more fundamental developments. For now, I do believe that that $10 mark for BlackBerry technically is the line in the sand, and if the share price stays below $10 for a sustained period of time, we do have to wait until next quarter's earnings before any realistic attempt to rally beyond it. So subscribe if you agreed with what I have to say about the Chinese tutoring market, in that I think that these two companies are likely to continue to exist and survive and continue to grow their market share in the future. And like this video if you like the insights, and turn on that bell so that I can see you next time. Now, over here in the US, I see that there's weaker retail sales, so keep an eye out on that Russell 2000 ETF, because if small caps are rolling over, well, it's only a matter of time until we see cracks in the S&P 500. So more insights till next time. Stay safe, and I'll see you then.